Do you think Bullard's right? Could you go to 3.5% and not go into recession? Is that a hard landing, soft landing?
That's going to be a tough call, Andrew. I think, the right thing to do is raise rates and raise them fast, but I'm not sure what that's going to cause in the economy right now because things are already slowing down. We're seeing that in terms of retail sales. We're seeing that in terms of demand destruction. So you could get a big downdraft in it. I mean, the market's already done this, and the market's already come down as we have it in an elevator, and the ride back up is so slow. So part of it's already been done in terms of the stock market. What will be interesting to see is what happens to the economy if rates go up that high. Right now, with higher oil prices, higher prices for almost everything, I think things will slow down. The question is how fast they slow down and what more damage could be caused. Has
the market already moved? We are seeing green arrows this morning. It seems like things are stabilizing here. The question is this some kind of dead cat bounce? Is this kind of some summer thing that's going to lull people into a sense of complacency and then the fall's worse? Or is it green arrows ahead?
So, having 2 weeks before this one down 5% each week was something we hadn't seen in a while since really 2020, and that was a different issue. I do think what investors in the market is looking for in the next couple of weeks are what are earnings going to be. So right now, yes, we could be in this lull period where, hey, we're already down 20%. How much more can earnings come down? And part of what we're also looking at, and you saw FedEx and a couple other companies, some are still raising their earnings estimates, but some can actually just stabilize. And I think the market just wants to see what are the true earnings of the S&P, what are the true earnings of companies, and from there, what are the growth expectations? So I don't see another major shoe to drop, but I do think there will be specific companies that will get hurt, especially those that have higher input prices and can't pass pricing on. So there are definitely opportunities.
If you got some cash on the sideline right now, what do you do? You wait?
If you've got cash on the sidelines and you have a 3 to 5 year outlook, not a 12-month or 6-month outlook, I think there are some really good opportunities out there. I think you can buy some high-quality companies in the industrial sector, like an Ingersoll Rand. You could buy some high-quality companies in technology if you want to hold your nose in terms of semiconductors, like Qualcomm and NVIDIA. And in healthcare, there's some really good companies like Bristol and J&J. So this is the time when you can kind of look at your portfolio and say, I want high quality, I want cash flows, I want growth. Is it going to be a bumpy ride? Of course. And then you can also say, hey, look, when things do get better, do I want to be in areas that the consumer is really going to be spending on? So travel, companies like a Delta, companies like an Uber. So I do think there's opportunity, but there's going to be volatility. And these companies that I just mentioned have solid balance sheets, have great cash flow. It's a pricing power issue and it's a demand issue.